Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
He is absolutely unique as a present president, former president, governor, vice chairman, and chairman of the Fed, and that no one in the multiple years I've been covering it synthesized Wall Street, business, and economics like Robert Kaplan. He was at the Dallas Fed with a real sense of the border political economics, the heritage of the Dallas Fed around Robert McTeer and the Georgia School, their research capabilities, and we're thrilled he could join us this morning for an extended conversation. It's been way too long, Robert. Let me cut to the chase. The definitive series, which Jerome Powell speaks of, is the Dallas Trim Mean. You are expert on that with your research staff. Does the Dallas Trim Mean for Robert Kaplan, does it indicate a vector of disinflation or a new worry back to the time of, say, Wayne Angel and a higher inflation rate?
It probably suggests inflation is a new word, sticky, meaning it's kind of going sideways and we're not making improvement. And I would guess that if prices edge up a little bit, it's going to be more supply side issues from here than demand side issues.
What I'm looking at, Robert Kaplan, is the ambiguity, the swirl, if you will, of American economics with our politics. Is the sum total of what our listeners and viewers understand on this Friday, is it towards a depressed real GDP because of policy uncertainty?
Yeah, so there are 5 big structural changes going on. That's very unusual. And I'll just tick off. We're restructuring the way we do fiscal spending, and it's going to have some jarring effect, but we're going to have less fiscal spending. If they succeed, that would tend to lower growth. We're going to do a regulatory review in every industry to try to produce more productivity growth. That actually might be helpful. There's going to be an effort to control the workforce. Obviously, no more people coming in across the border entering the workforce, and we're going to deport. That tends to lower growth unless we have an effort to revitalize legal immigration. And then we're going to try to restructure the energy ecosystem in this country to lower costs. That's probably helpful. And then the last thing is the tariffs. And the tariffs have a price effect, but I would guess these tariffs and the uncertainty with them on margin lower growth. So you got a bunch of cross currents, and I would guess the net of it all is, I would guess, growth is probably slowing a little bit right now. And the uncertainty, as well as when you cut government spending and you reduce workforce growth, or you reduce the growth of it, you limit GDP growth. The effort is, I don't know if that's that concerning, and that I think the effort of this administration is to try to create more organic, more private sector growth, less government-led growth, so quote-unquote healthier growth. But top-line growth probably is going to be somewhat weaker, I would guess.
So, Robert, given that backdrop and the 5 big structural changes that you just outlined, if I'm the Federal Reserve, do I just sit on the sidelines and kind of let it all play out? Because the market is kind of suggesting that the Fed's not going to do a lot this year.
Yeah, I think the right thing, the Fed is quietly drifting stage left, and that's okay. The center stage is structural changes, executive branch changes away from the Fed. And in a period like this, I think the wisest thing the Fed could do, is be comfortable, standing pat, be careful about what they say, because I think commenting too definitively on how these structural changes are going to play out. It's too early to do it. Tariffs is a good example. We don't even know what the tariffs are going to be. And so, yeah, I think the Fed will do less. I think that's fine. And I think Jay Powell's communication on that has been good recently, where he's made clear we're in no hurry and people should be prepared. Their focus should be more on what's going on at the executive branch. And the second comment I'd make, if there's a rate I'm focused on, I'm much more focused on the 10-year Treasury rate than I am the Fed funds rate.
Interesting. So, Robert, as we sit back here and we think about the economic backdrop here, how do you view the consumer right here? I mean, we've heard about and talked about and noticed in the data this K-shaped economy. How do you think about the consumer?
There's two big groups. It's confusing because there's two big groups, probably unlike maybe anything I've seen in my career. There's one group that's 65, rough numbers, 65, 70 million workers that make 55 grand a year or less. And they are struggling to make ends meet. They've lost at least 25% purchasing power. They don't tend to own financial assets. That group is spending, but they're watching every dollar. They're going to McDonald's and they're agonizing over even McDonald's trading down. That's 65, 70 million workers and consumers.
Right.
There's another 65 to 70 million consumers, 55 and older, own their home, have a fixed rate mortgage, have financial assets. And this recent period has been pretty good. Yes, there's inflation, but their financial appreciation, their financial assets has offset it. And because their mortgage is fixed, they're really not that sensitive to higher rates. And they are spending much more aggressively on services and other products. And that's why when you see corporate earnings reports, it's confusing. Which of these two groups are you serving? If you're serving that first group, you're likely seeing a much more challenging business. If you're serving the second group, business looks better to you.
Robert Kaplan with us, of course, the vice chairman of Goldman Sachs, but far more his relationship with the Dallas Fed, all sorts of academics through the year at his Harvard. We're thrilled he's with us, and we say good morning to you on YouTube, in your home, at your office. All of Goldman Sachs tuned in on YouTube.
Oh, I mean,
that's happening right now. Robert Kaplan, I got in the new Foreign Affairs last night. It's a very strong issue, folks, in these tumultuous times. Mariana Mazzucato, who Robert Kaplan is not on the same page with, the esteemed left economist, huge economic history student, Mariana Mazzucato, with a wonderful essay on where we need to go. And Robert Kaplan, I'm sure you don't agree with all that Professor Mazzucato wrote up in the new Foreign Affairs, but the one thing she talked about, you're the most qualified person I know, is the financialization that we've seen in the last 10, 20, even 30 years, even before the great financial crisis. How do you explain the financialization of the American culture and the winners you just described and the millions of losers out there that are a reality?
Well, so I'll put it this way, and you've heard me talk about this before. Listen, I work at a firm now, and we run a business, and I've run other businesses. Human capital is the most important asset you have, and that's true for the United States. It's true for the state of Texas, and so on. And early childhood literacy, secondary education, skills training, digital divide, allowing people to be more productive. That is key to a growing middle class and building the economy. And what we're seeing a little bit in the last number of years is a divergence financially between I just mentioned those two groups, working people that don't take government money, have probably been employed, done everything right their whole career, but they don't have a lot of savings. They may not own their home. And they're reading in the newspaper about another group of people out there who are rising by bounds in terms of their financial wealth and financial assets. And it seems like capitalism isn't quite working for them. And I think education is one of the vehicles to try to address this. But one of the issues with decelerating workforce growth is education tends to be paid for at the state level and city level. If you're a growing city or state, you got the money to spend on getting affordable childcare, full day versus half day pre-K, all these critical things. But if you're in a state, which is probably 40 plus states, whose populations are flat to down, you may not have the money. And then philanthropy, which I'm actively involved in, can help pick up the slack. But I think we should be focusing more on our human capital and a little less on financial engineering.
And Paul, that's the common ground between Mazzucato and Kaplan. No question about that, the individual education effort.
Robert, I know in your role as vice chairman of Goldman Sachs, you speak to CEOs around the world. What is their view of, I don't know, the ability to take risk, to maybe think about M&A as a growth scenario? Where are they in terms of how they feel about their business and their ability to take risk over the next couple of years?
Okay, so on the positive side, I think the prospect of a more balanced regulatory environment, more cost-benefit analysis, more, in their words, more sensible regulation. They're okay with tough regulation, but there has to be a rationale for it. I think they're excited about that. On the other hand, they're dealing with the trade uncertainty, and if you're going to domicile more manufacturing, for example, in the United States, you really need the corridor of Mexico and Canada for integrated supply chains and logistics. And when they see threat of tariffs on, for example, Mexico, which they hope doesn't happen, which could undermine logistics and supply chains, it gives them pause and makes them want to just slow down a little bit and be more careful. And the other big thing is AI and technology. Now, we've had technology innovation for years, but if you're a CEO right now, you've got to spend on AI in your business. You're not sure which use cases will work and which won't, but you got to do it. And so I think you're going to see, though, a lot of merger activity by companies who feel that, boy, if we're going to take share in the years ahead, if we're going to grow in the years ahead, we're more likely to have to take share. And we're going to have size and scale, and the ability to afford AI investment is more important than it's ever. And I think you're going to see a desire for many companies bigger to try to deal with that.
I got to squeeze this in, too important. There seems to be another threat, happens every 2, 3, 5 years. It's not specific to Mr. Trump, on Fed independence. How does the institution of the Fed, Mr. Kaplan, protect itself and stay independent versus the McChesney-Martin challenges decades ago?
Yeah, so the thing that's always challenging at the Fed, and this isn't new, is regulatory supervisory policy at the Fed is not politically independent and has not been politically independent. The tilt of it changes, whether it's Obama to Trump, then back to Biden, now back to Trump, and that you'll see. On setting the Fed funds rate, though, and the stance of monetary policy, I think it's critical to this country that stay politically independent. Now, the president can jawbone and pressure, and that's not new. It may be more intense right now, and the Fed will do its job and should to try to the extent they can ignore that, make decisions. The biggest threat to the Fed, I actually think sometimes, is not from outside. Then you have to be careful as a governor or a president. Don't try to say things publicly you think might go over better or worry about the pressure. Just do what you think is right. And as long as they manage themselves, I think they'll get through this in an independent way.
Out of time. Robert Kaplan, next time you're on, we're doing a complete hour on Do We Need the Dots? Robert Kaplan of the Dallas Fed, always and forever, and now vice chairman at his Goldman Sachs.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now on oil, it has been too long, and she is definitive on Saudi Inc., as we had the joy and the honor of speaking with Edward Morse a few days ago.
Right.
Now an honor to speak with Ellen Wald. Ellen, what does the Saudi royalty want besides $100 barrel oil? What's their desire, given the new hydrocarbon politics of Washington?
You know, it's interesting right now. It seems like they really want to broker peace between Russia, Ukraine, and the U.S. or Europe. They're really pushing themselves as these, kind of neutral peace brokers. Of course, it isn't all so altruistic here, because with an end to Russia-Ukraine hostilities could come some very interesting developments for the oil market, and you can be sure that the Saudis are all about that.
Ellen, just give us, with some hindsight here, 3 years into this war, where and the sanctions associated with that, where does the Russian oil, where has it gone? How does it get into the marketplace these days?
Yeah, that's a really great question, because it used to go all over the place, and it still goes. It just really mostly goes to two places now. It goes to China and it goes to India. India is just opened this massive, huge market for Russian crude oil, and what's so fascinating about it is their refineries have been benefiting immensely from cheap Russian crude. They buy a lot of it, and they process it, and they make a lot of diesel, and then they go ahead and they sell it to Europe. And Europe is more than happy to buy this, I kind of like to call it laundered Russian crude, because they know where it comes from. They know that it's Russian crude, but as long as the origin of the diesel that they're using says India and not Russia, they're more than happy to buy it and keep their supplies up and from this cheap Russian oil.
I took out a chart on the Bloomberg today, Ellen Wald. It's an inflation-adjusted Saudi light. And essentially, on an inflation basis, as a generalization, the price of a barrel of oil is where it was 40 years ago. Do we overplay in the media? Do we overplay in our own minds, all of us, the listeners and viewers, the importance of oil? Has it become inconsequential to the public because of its cheapness?
So that's a really good question. I think that we do overplay the importance of oil in some respects. I know we overplay it when we look at, say, the Saudi budget. So every year the IMF comes out with these stats and say, oh, the Saudis need X price of barrel of oil to cover their budget. And the fact is that is a meaningless statement, because that's not how it works in Saudi Arabia. Aramco sells oil, and then Aramco makes money, and then the Saudi government gets they get royalties, they get rents, they get dividends. Now they get, it's not just that they don't just get the money from the barrel. There's a lot more that goes into it. And so things are a lot more complicated now. Of course, if you look even farther back than 40 years ago, when oil was like two something a barrel, and you realize that what OPEC was fighting for in the 1970s was like to increase it to a price of like $6 something, and that was considered obscene. The request was considered absolutely obscene. And we think about that now, and it seems rather ridiculous. But when you do consider inflation and you do consider what we're using oil now, I mean, look, natural gas is becoming more expensive, such that we're seeing a lot of switching over to gas oil from natural gas right now, which is not good for the environment to begin with. But it's, so oil is still very, very much a very important, and I would probably say maybe the key role in terms of the hydrocarbon spectrum today.
Right. I got 10 seconds. When do we get a new book? That's all anybody wants to know, Ellen.
Oh, that's a good question. Not anytime soon. I'm thinking maybe I should write a TV script, considering how successful Landman is.
Landman, there you go.
See, would you like to weigh in on this? John Tucker can wait.
Well, I know everything about the oil and gas. I'm an expert.
What would Ellen Wald bring to Landman? Oh, wise one.
Well, I'll tell you what, getting oil out of the ground, that is serious business. That's not an easy job. Those people work hard. That's my takeaway. How do you deal with idiots like Paul Sweeney and Tom Keene? The closest I've been is a gas station. Exactly.
It was 44 cents a gallon, and I worked at a gas station. So it's not easy.
I'm ready to be a senior fellow of the Atlantic Council now. That's how smart I am.
Paul Sweeney, oil expert. Ellen Wald,
the
thank
expert.
you, senior fellow at Atlantic Council. the author of Saudi Light.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Out of the University of Michigan, he has crafted out the most important job in tech journalism. Lucas Shaw, sort of close. Lucas is
I'd
sort
say
of...
that LA bureaus.
They're on fire. Mark Gurman joins us in studio here in New York on his ownership of the Apple story. Mark, where I am on this, going back to I was one of the first people to see Lisa and the failure of Lisa and a lot of the early Mac stuff, is to me always and forever what the media misses, and you don't miss it, is chips. I don't want to hear about Tim Cook. I don't want to hear about stupid videos launching stuff. I'm gonna butcher the name. Who is Johnny Shruji, who's going to give us the A18, A19 chip this fall in the new Apple iPhone?
Well, first of all, Tom, you did not butcher the name. That is right.
I came close?
No, you got it right. It's Johnny Shruji.
Okay.
Nice.
You were spot on, as always.
Once a year.
Shruji is probably the most important executive at Apple, other than Tim Cook, who I don't want to talk about.
Why?
At this point, with so much commoditization in the technology industry, Apple's unique differentiator that makes their products better than the rest is their chips.
Thank you.
It allows them to differentiate the designs. They can have thinner form factors, better power efficiency, unique components that all enable new features. For instance, the artificial intelligence capabilities that everyone is talking about today, that support started to be built into their chips in 2017.
Right. Okay, I know you're not on speaking terms with, say, a Uber bull like Dan Ives, but if you had a cup of coffee with Dan Ives at Wedbush, and with your journalistic abilities, is there a constraint or a limit to it on a mathematical basis? Is Johnny Shruji and the rest, are they going to get to a limit where they can't get better and the stock levels or goes down?
Well, I think in terms of performance, you've seen drops. There was a time 10, 11 years ago where you were getting 100%, 75%, 50%, even 25% year-over-year performance gains.
Agreed.
That's not the case anymore. At most, you're getting 10 to 15% performance gains, and that's due to a combination of the engineering at Apple, but also their secret sauce, which is their deep partnership with TSMC, which year after year is able to improve their both production capacity and their production technology.
Okay, my book of the year was Chip War. It's a fabulous book about the history of semiconductors. If you're at 3 nanometers, don't you have a constraint towards 2 nanometers?
Well, you're going to get to 2 nanometers eventually. You're going to get to 1 nanometer, half a nanometer, and then even smaller than that. These production technologies are only going to improve. The bottleneck, however, is that they need to do 2 things at once right now. They need to walk and chew gum. They need to improve that production technology, but at the same time, they're in the middle of a move from bringing chip production out of Taiwan to other places. Soon, you're going to see Apple at full steam at a plant in Arizona. They're going to eventually work on some plants in Europe. So you're talking about having to do 2 things at once. Make your production technology better and move it outside of Taiwan because they need the additional production capacity. But there are real concerns geopolitically, in terms of world affairs, in terms of potential world disasters. Why would we put all of our chips in one location? Right. If Taiwan goes down, Apple goes down, so to speak, for a long time. So that needs to be resolved.
On our new digital distribution on YouTube, subscribe to Bloomberg Podcast. With us, an extended conversation, our chief correspondent, Apple and Technology, Mark Gurman. Paul?
Hey, Mark, a lot of folks feel like with China maybe not the growth story for Apple that it used to be, that the company really needs to look to India in a bigger way. And they need a lower cost phone, arguably, to do that. Is this 16E, is that the phone that they introduced this week? Is that maybe something that could be really competitive in a market like India?
First of all, I want to add to what you said about China. So China, you're right, it's no longer a growth story, but it's, I would say, a decline story at this point, right? We saw sales fall 11% on an annual basis. They're about $8 billion less a quarter in revenue than they were just a couple of years ago in that region. And this, when Tim Cook became CEO replacing Steve Jobs in 2011, that was really the number one priority, was making things work in China. In his first few years there, there was some real innovation when it came to the iPhone. They brought the bigger iPhone 6 and 6 Plus to China just a few years after he became CEO. And at the same time, he himself struck a deal with China Mobile, biggest carrier in China. So they had the twofold. They had that phablet-sized device that everyone loves, right? In addition to access to more consumers than they ever had before. And so that was like a lightning bolt for them. But since then, they've sort of petered out a little bit there. India is very important. They believe they have very small market share there. It's sub 5%. The way they see it is they have 95% left to go after, right? And I think they're slowly growing there, but they are going to gain some steam there. Unfortunately, to your point, the iPhone 16e, with that device, they've abandoned the budget market. But there are some little tricks and levers they can pull. So you're going to have that $600 starting price for the iPhone 16e. But what I think you're going to see is a bigger push into clearance phones, so the older phones, refurbished phones, and some of the older models that they don't advertise on their website, that they're going to keep pushing through resellers in India. We may not hear about it here in the States or in Europe, but in India, they're going to be selling those things through resellers.
So how does the company view China? Is this they're managing a declining business, or is this something that they think they can salvage potentially?
I think the optimists in the company believe that they can salvage it. It's a real problem for them. You have the slowed sales in China. You have the current tariffs situations. You have the geopolitical concerns.
Yep.
And oh, by the way, at the same time, that 30 years we spent building up the world's biggest supply chain, the most intricate supply chain, entirely based, or not entirely based, heavily based in China. By the way, we're in the middle of moving that to more places. US, India, Thailand, Malaysia, Vietnam, Indonesia.
What's the time frame for that? For like, again, you said 30 years to build up that supply chain that really was centered around China. Is it a similar time frame to try to decouple itself from China?
Yes.
Okay.
I mean, that took a long time to build. And so they've been working on decoupling themselves from China starting already, 6-7 years ago, right? Even 8 years ago, towards the beginning of the Trump administration. COVID gave it increased prominence and importance, but this is going to take a while. They've really not moved the needle in terms of moving out of China. And by the way, I don't expect them to fully move out of China. This is about augmenting and growing. So if they think they're going to double their user base in 30 years, you need more capacity. They've probably filled up what they can do in China, and they need other places to build the rest.
When the release comes out, you've been very good about this, but the rest of the street's touchy-feely, soft questions about product. I go log the growth of services and iPhone revenue, and services is growing so steady and so large, it's literally back to just pre-pandemic iPhone revenue. Do you, in your reporting, see a true persistency of services growth to justify the bull case?
Yes, you have to ask yourself, Tom, what would the case be for Apple? How would investors feel about Apple? What would we be saying about Apple if it wasn't for the services story right now? They knew about a decade ago that they needed to augment their device sales with a new growth story, and that is services. Apple TV Plus, I think there's an opportunity as early as next year or the year after to release an ad-supported version. And I'm not saying I'm the biggest fan of the content on Apple TV Plus, but they have a lot of fans and they have some absolutely terrific shows. And I think they're making some money on the $10 per month subscription. But once they do an advertising model and get people hooked to more great shows, I think that's going to be the real moneymaker for them, and that's ads. I think ads is sort of the secret lever they can pull. I actually wrote a few days ago that they're seriously considering bringing ads to Apple Maps. Apple Maps is one of the most used apps on the iPhone ecosystem, don't forget. 2 billion plus devices strong there. So I think there's opportunities putting ads in some places that could be a nice little growth story for them.
Have we moved past the period where if you're an investor, you're just an Apple observer, it's about the next product launch? What's going to change things? What's going to be the next new thing? Have we kind of moved past that? Is that we are kind of where we are, and now we need to think of other areas of growth?
I think investors need to move past that. I'm not moved past it because I always will still see Apple as the company that brings out major new products and revolutionizes things. But I think with the Vision Pro and the AI push has showed us that they're not able right now, or they don't have that magic formula to bring out that major hit that is a game changer like the iPhone was, the iPad was. the Apple Watch was to some
Yep.
extent.
Right.
And so this is a company that instead of coming out with a new $100 billion a year device, they need to come out with a bunch of smaller bets that add up to the revenue
Right.
that would come from a bigger bet. So let me give you a few of those,
Please,
right?
give me a few.
Okay. Robotics. That's going to be a big endeavor. Tabletop robot, right? It's a
Tabletop robot.
Yes, so it's a smart home hub, a big iPad-like display on a robotic arm that moves around on your desk and has a personality, right? It's like a companion in your workspace.
Can he get the 17-year-old to empty the dishwasher?
Okay, well, you may not be able to get your 17-year-old to empty the dishwasher, but you may one day be able to get an Apple humanoid robot to empty your dishwasher. And the humanoid is so interesting. I know it sounds ridiculous, but this is where the industry is going. Meta is starting a multi-billion-dollar division as of last week to develop humanoid technology. They want to be the Intel, Qualcomm, Android of the robotics industry. I'm telling you, this is the next big thing.
Okay,
in
but you
technology.
and others told us about the stupid goggle thing that went down in flames. What's a humanoid robot?
I'm not
gonna
saying
cost?
it's not going to go down in flames. I'm saying it's coming.
Okay, fair. Nice distinction. Mark Gurman continues with us. We're thrilled to have him in our New York studio. It's usually ensconced on the left coast. Mark Gurman, of course, driving all of our Apple coverage in definitive around the world for his voice on Apple News. Of course, very quiet about his sources, as he should be. I want to go to what nobody ever talks about anymore. I remember, forget about the Wayback Macs, but I remember being in absolute awe of 16 megabytes of RAM. We got M4, I guess I got M5 coming now. Yep. I got, in my music thing at home, I got a big Mac Pro 16, the thing's got bells and whistles on it. Do computers still matter to them? And do they want to put out a cutting-edge computer still for creative America, creative globe?
Oh, absolutely. I think that they were, they were teetering on the Mac about a decade ago. There was a multi-year period between 2015, 2018, where they weren't really coming out with redesigned computers. They weren't doing frequent updates. And the problem was twofold. One, they believed maybe too heavily in the iPad, right? The iPad is the future. But then Intel, they were really a laggard, not doing a great job with their chips, not bringing the performance gains Apple wanted. And then you compared the performance of phones and tablets compared to what you're getting from the Mac in terms of year-over-year efficiency improvements. They were in different worlds. But Apple moving to its own silicon, you mentioned Johnny Srouji, 5 years ago in the Mac, that really changed everything for them. It had sales skyrocket. Last quarter...
It was 9%.
Well, yes. Well, in the last quarter, it was about 15% year-over-year growth for the Mac. And so that was very significant. And so I think they now have the resources and the confidence to even double down on the Mac. So what I think you're going to see... What does that mean? Well, you're going to see new Pro machines this year. Creatives, you talked about creatives. You'll get your new Mac Pro. You'll get your new Mac Studio with the M4, M5. They've now moved the MacBook Pro
to... Okay, you're talking to Mrs. Keene right now. Keep it up.
Yes, the Mac Pro...
We need a new M5.
Yes, Tom needs his new M5 or M4 Mac Pro. The iMac will get another update. They've moved the MacBook Pro, which is not their most popular machine, but a really hot seller and really important. It's what I use. It's what I think a lot of people here use, a lot of people in college and schools use. They've moved that to an annual upgrade cycle. Every November, like clockwork, you're getting a new MacBook Pro, just like you get a new iPhone every year. So that is a really big deal, and I think is really important. MacBook Air, that's the most popular Mac, okay? Last updated a year ago. Here's a scoop for your show. Apple's preparing to put the new MacBook Air M4 on sale in March, so next month, in just a few weeks from now. They've started preparations. They've started sending materials to their retail stores. They've ramped up production, and they're nearly ready to go on the M4, 13-inch and 15-inch MacBook Air, their most popular machine, just in a few weeks from now.
150,000 employees. Is this still the cool place to work if you're in this biz?
Good question.
Well,
good question.
I'll answer that in a second. But I think the way that I would see it is you're working at a place where you're impacting 2 billion plus consumers.
Yeah, that's a good way to think about it, yeah.
And you're influencing the products that you probably use on a daily basis. So I think that's at least what the company sells to their employees. In terms of the cool stuff, in order to keep engineers at a company who've been there 20, 30 years still interested, you need to give them some moonshots. And so the Vision Pro was a moonshot.
Interesting.
The self-driving car was a moonshot. And so they probably kept around people at Apple who wanted to leave quite a bit longer just by throwing them on these new projects and just pushing them from new moonshot to new moonshot to new special project group to new special project group instead of having them, flee to Google or Meta.
Tim Cook Auburn, 1982. Just get that in there for Duke. Who's after Tim Cook? I mean, we're fixated by Iger in Disney. I don't see people fixated about who's after Tim Cook. Should we?
You're seeing one person right now who's fixated on who's after Tim Cook, because I think it's a fascinating story. He's been there around 3 decades at this point. He's been in the job since 2011. He's going to be pushing 65 next year. But then you look at this, right? You have Jamie Dimon. He's in his late 60s, right? Old. You've got Iger, who's in his almost going to be in his mid 70s. You know, there's a universe that Tim Cook could stick around at Apple for a Bob Iger-like tenure. Now, you know, Iger took a few Michael Jordan-like breaks, you know, in between, so that's a little bit unique. I think Cook's got, 3 to 7 years there left in the tank. Now, you look at Apple's executive team. Here's the problem. They're all in their mid-60s, or going to be in their mid-60s, late 60s by the time Cook retires, right? You've only got one person on that executive team who has the ability to step in there in 5 to 7 years, be CEO, and stick in the role for a decade. That is Mr. John Turnus, the Senior Vice President of Hardware Engineering. He's in charge of the devices business, right? He's not an operations guy. Maybe he's not a business guy or design guy, but he's the one in charge of their money makers.
We're out of time. Yes. Are you going to come back to New York soon? Should we can do it remote from Michael's in Santa Monica.
The LA office is phenomenal.
It is.
Century City. Extraordinary.
Shay Gurman. Yeah. Mark Gurman, on behalf of all of us on Team Bloomberg Surveillance, thank you so much for your work.
Thank you all.
It is definitive to be at midnight and there'll be some story out of Taipei or Singapore. Gurman says.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Bloomberg Surveillance on our front pages, the Lisa Mateo moment. Lisa, what do you got?
Okay, we all know Ferrari, right? Hot brand. But the Wall Street Journal has this really interesting look into the crazy economics behind why it's dominating the luxury car market. So it's worth about $90 billion, but it only delivered about 13,700 vehicles, just over that. So they call it this business model based on scarcity, because sometimes they only offer like a few select vehicles to collectors, and the collectors love it because they're part of this elite club. And then while most cars lose value, some of these like select Ferraris, they keep their value, they gain value. Like the hypercar in 2013, it was like $1.4 million. It now fetches about $3.8 million. And they show it's similar to like the Hermes, the Birkin bags. You know, everyone wants a Birkin bags, and they say it's the same. Aware of that. They say it's a similar kind of thing. You know, it has this thing that everybody just wants them, and that's what it is.
So here you go, Tom. I've got something picked out for you. The 2025 Ferrari F80 list price. $3.74 million.
Yeah, but you got to be Sir Lewis's height to get into things.
Yes,
or Lisa's height.
That's why they don't have to sell
them. How does Matt
anymore.
Miller get into the Ferrari and the Lamborghinis? I don't know how Matt
Miller
went
over to the Aston Martin store in Park Avenue once. They threw me out of the store.
Yeah,
like,
not fitting.
We don't do it.
Nice try.
So,
Next.
Okay, this one, you pointed this out to me, Tom, so about how restaurants, some are charging like deposits or minimum amounts when you have to make a reservation.
Don't get me going.
Well, I found a story. Actually, London is starting to do this because higher number of cancellations, no-shows. They're also saying it's because of those bots and resale websites that are taking up a lot of the reservations. Yeah. Then they have these social media influencers who want the free meal in order to post a picture. So they're saying that they're charging like $100 like per person as a minimum, and you have to pay it when you book the reservation.
Reservation squatting.
Squatting, that's another thing. Yes. When you like multiple bookings and you only go to one.
Wonderful restaurant just off Madison, Amaranth. Good morning to Amaranth. We were talking to Libby Cantrell about the new Van Cleef store. And they said over at Amaranth, great food, great lunch, blah, blah, blah. And Amaranth told me it's the plague. And they're battling what to do about
Let's go back to the old days where you called up the restaurant.
Right.
Yeah,
you said,
exactly.
I'd like a reservation, 2 people.
Yeah.
Sometimes you have to wait in line, actually. You can't even call anymore.
Let's squeeze in one more story.
Yes,
quick.
one more. Okay, big sports media news. Major League Baseball, Walt Disney's ESPN, they're ending the broadcast relationship at the end of 2025. So we talked about it. The league says it's a mutual agreement. ESPN kind of scaled back their baseball coverage because they wanted to pay less.
They're embarrassed
they
by
did.
it.
So there's a lot of ways to watch baseball, though.
Quickly, Paul, where's this going to end up? We're not going to watch the Red Sox.
ESPN is looking at its costs and saying, hey, baseball is a regional sport, not a national sport. We're a national network, so the costs aren't worth it for us right now. So like everything else, Tom, it's going to streaming.
Amazon, Netflix, whatever.
Yep. And,
I mean, they spent over $1 billion on James Bond. What are they going to spend on the Boston Red Sox?
Anything they want. They can afford anything they want, Tom. So, so it's going to the regional streaming services.
Wait a minute. Ari, why are we showing Yankee footage on YouTube?
Yes, there you go.
What else would you show?
Exactly. What else would you show?
You want to go work for Mark Gurman, Ari? That's just too much. I mean, you don't want it.
Thank you, Ari.
That's the last Yankee imagery we do. Lisa Mateo, thank you so much. The newspapers. I will put it out on Twitter and LinkedIn.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.